Hi, everybody, and welcome to the March 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. February was another good month for stocks, with most markets up in the low to mid-single digits on positive economic and earnings news. The riskiest indices, the Nasdaq and emerging markets, did especially well as investors stayed risk-on. Fixed income, on the other hand, generally pulled back as interest rates rose significantly during the month on fading hopes for Fed rate cuts. Both in their different ways reflected the broader economy where growth continues, but so, unfortunately, does inflation. So let's start with growth. The revised growth rate for the end of last year ticked down slightly, but remained very strong. Job growth so far this year has actually accelerated from last year, and both income and spending growth will remain very positive, as has business investment. While there are some recent signs of slowing as the consumer shows signs of pulling back, overall for the first quarter the economy has continued to go from strength to strength, and we simply still don't see any recession in the data. That healthy growth, though, also kept inflation up, meaning we're not seeing the continued decline that we were hoping for. Both headline and core inflation ticked up a bit last month, and while the headline showed improvement on an annual basis, core inflation stayed steady. And that means the Fed can't declare victory over inflation. Markets are adjusting to this, and one of the positive results from last month is that market expectations on rate hikes now pretty much match what the Fed itself says, which should help limit future volatility. But of course, rates aren't the only thing out there to worry about. Things we need to watch include the effects of the war in the Middle East on supply chains, which may be pushing inflation back up, the pending election, which will increase uncertainty across the board, and of course, all the things we don't even see yet. There are real risks out there. But despite all that, we're still in a good place. With the U.S. economy growing, especially on the jobs front, the foundation for markets is solid. Corporate earnings came in better than expected last quarter and should keep growing. Markets are adjusting to the expectation of fewer and slower rate cuts, but as the Fed has noted, we are making progress on inflation. And as we've seen so far, after a very strong year like 2023, the momentum tends to continue. On the whole, then, we are in a good place as we move forward into the year, and I expect that to continue. Thanks for watching. I'll be back again next month to talk to you again. Until then, be sure to check my blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. And have a great month.